Hey, 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 what's shaking bacon? It's Renee the Realtor here, and we're here for another episode of Lending Lessons. Let's add in some more alliterations. Today, we are talking about free money. Mike's going to tell us how we can get free money so that we can have a bigger down payment or help out with our down payment on our house because interest rates are what they are, and the price of the house isn't getting any cheaper in our market. Average cost of house is just under $700,000. And so if those two things are there, what's going to lower our monthly payment? And that's going to be down payment, the amount of money we put down. What makes it affordable. So Mike, take it away, man. Tell me how I get free money.
Thanks, Renee. Hey, everybody. Thanks for tuning in. Yeah, Mike Oswald here, New American Funding. And we are helping a ton of buyers utilize down payment assistance programs. So really, I mean, that's what it sounds like, so if you qualify, there are nonprofit entities that will offer a down payment assistance, which will help significantly reduce your cash to close, meaning they'll pay for your down payment or it'll cover your down payment. And it will pay for, a portion of your closing costs, taxes, insurance. And so that's great. But what a kicker on that is Renee is a skilled agent, right? So she's able to negotiate with the seller to give you back a concession at closing, which simply means that the seller gives you some money to cover closing costs. And we are putting people into homes for $1,000 out of pocket.
Okay, so I appreciate you bragging on me and thinking that I have a magic wand. I always, negotiating really is my jam. I'm the youngest child. I think that's what comes with the territory is everything's a negotiation. And I have 2 teenagers. Yeah. So I negotiate every day anyway.
Yeah.
But in a seller's market, a strong seller's market, that's a little bit more difficult to do. However, our market is starting to shift a little bit. It's starting to soften, become we're still a seller's market due to inventory. With low inventory, the sellers have more power. That's why we call it a seller's market. So as we gain more inventory into the market, these options become available, which is why in 2020, 2021, parts of 2022, we didn't see down payment assistance even coming up. Mm-hmm. So as things shift, what's some of the names of the programs, or what do people have to do to qualify, or what's that look like?
Well, there's a few different down payment assistance options. The most common one is CHFA, which is the Colorado Housing and Finance Authority, CHFA for short. That is I think the best one that's available, but essentially there's several others that we always look at, but essentially it's you have to qualify for an FHA loan, which is great because FHA is more lenient. And we've covered that in other calls where FHA will allow for lower credit score. So the minimum credit score is a 620 for down payment assistance. CHFA goes down to 580 or FHA goes down to 580, but for down payment assistance, 620. And then debt to income ratio with FHA will allow up to 55% debt to income. So again, someone with maybe not the greatest credit, someone with a little bit higher debt to income ratio can qualify. The other caveat is there's income restrictions. So these down payment assistance programs want to make sure that you're within kind of a median income. Honestly, it's pretty big. It's $160,000
for a single person or a couple?
For household. And so actually for the person on the loan. So you can actually have a higher household income and still $160,000. So that's pretty good income, right?
Yeah.
I mean, so it's really not the news on that. And really the gist of it is you don't have to be someone who makes really low income to qualify because you wouldn't be able to buy the median home price. So they've really come a long way to make it something that's realistic, right? It'd be one thing if the max income was $60,000. You'd be like, well, that's great, but I can't qualify to buy anything. So what good is it? They've really come a long way to make it so they meet up and they make sense.
Yeah. So is this Is this a grant? Is this a loan? Is this tacked on to the end of your loan?
There's both. There's grants that can be available, basically, if you qualify, and then which is just money given to you. And then there's also, it's a silent second, which is the more popular one because it's got better rates, that type of thing. But essentially what they do is they just give you a loan that you don't make payments on, and it doesn't accrue interest.
Okay.
So it just sits there on your title. So you make payments on your first loan, the loan that you're worried about, that's what you qualify with, those are payments. And that second just sits there. It doesn't grow. You don't make payments. And then when you go to sell the house or refinance it, you pay off that second.
Right. Well, what are the drawbacks? Because I'm not seeing very many here.
Well, the drawbacks are you do have that second, lien there that you have to contend with down the road. If you have an equity gain in value, right? So that's the message here, right? You buy now, use down payment assistance. And then as the market shifts, rates come down, your value is going to go up. So you should be okay there, but it is there. You do have to pay it back, not out of pocket, but just out of the equity in your house. And then also there's some limitations, meaning you can't take advantage of the seller paid temporary buy downs that are available, like the 3-2-1 or the 2-1. Down payment assistance won't let you do that. So your rate is kind of where it's at. It's fixed rate, and it's the same rate that you would get with a regular FHA loan. You just can't take advantage of the buy downs that are available right now.
So this wouldn't make sense with a VA loan because they don't need a down payment, right?
Yeah, absolutely. Yeah. VA is 100% financing typically, so don't need down payment assistance for our veterans.
So do we need to buy a house in a certain neighborhood or a certain type of house?
You don't. This works on single family, it works on townhomes or condos. It doesn't work on 2 to 4 unit properties. So it's just for the standard, but it'll work on a condo. There's no geographic limitations in Colorado. You can buy anywhere. All you have to do is meet the income. Now there is purchase price limits that kind of coincide with the loan limits that we've talked about in the past, meaning, so we never really run into an issue there because the county loan limits coincide with the price of homes and what people can qualify for. So they kind of all come together.
Yeah. In Denver County, it's a little over 800,000. In Arapahoe County, it's probably really close. I'm putting you on the spot.
Absolutely. Yeah. I don't have it in front of me, unfortunately. Yeah.
I'm going to say it's 786 or something like that.
Yeah. And we just, honestly, there's really, FHA has loan limits that are in the counties. And so typically we don't exceed those, and then CHFA falls in line. I mean,
yeah,
we always take a peek at them, make sure we're good, but it really never, very, very rarely comes into play.
Okay. My last question, as far as restrictions go, can these be used in 55 and over communities?
Sure.
Okay.
Yeah, as long as they'll allow FHA financing in there.
Yeah.
Which I don't see why they wouldn't. Usually if the property's in good shape, then you're good. But
yeah. So the reason why I ask is that I'm seeing grandparents want to move closer to grandchildren. And if they're coming from out of state, chances are whatever they're selling there is worth a lot less than, or is selling for a lot less than what they're going to buy here. So 55 and over communities have a very good appeal. There's, not the maintenance, not that sort of thing. So I just want to make sure that before I send my clients your way about this, we get it.
Okay. Yeah, there shouldn't be anything as far as a deed restricted community. That's just age restriction for seniors. You shouldn't be any issues there.
Awesome. So there is free money. I just have to have a decent credit score, use an FHA loan, and talk to you.
Yep, absolutely. We are helping a ton of people do this. It's pretty exciting stuff. So
yeah. Well, I know that for my buyers, it's going to help them, give them another option so that if they go into the property and there's some cosmetic fixes, they can keep some of that money in their original down payment money in their pocket for those upgrades and use some down payment assistance. So
you can use down payment assistance even if you have money to put down.
That's awesome.
So you can save your money and use that if you needed to, like, put money into the property. Or, hey, if you're a senior and you want to keep money in the bank and you're okay with the payment and you're really not worried about that second because you're not going to sell.
Yeah.
Yeah. So.
Great. All right. Well, thank you so much for hopping on today again on Lending Lessons, Mike. I really appreciate it. Guys, if you like this information, hit the like button. Don't forget to subscribe so the little bell dings when we post a new video, which is every Tuesday at 11:30 a.m. Mountain Time. We're located in Denver, Colorado, and colorful Colorado. And if you ever have any questions, not only are Mike and I's phone numbers at the bottom of the screen right now, they're also all the contact information for both Mike and Nick, the other lender who jumps in on these lending lessons. All that is below in the description. So thanks so much for watching. Feel free to forward this if you know somebody who's thinking about buying and is worried about a down payment.
All right. Thanks for having me. Thanks, everyone.